He's the chief enforcer on Wall Street and says protecting everyday investors is his top priority. That means the chairman of the Securities and Exchange Commission is keeping a very close eye on issues like cryptocurrencies and the Elon Musk takeover of Twitter. Despite the SEC still being work from home, Gary Gensler made a rare appearance today at the office, and I had a chance to sit down with him for an exclusive interview. And we started by discussing what oversight looks like, and when a company the size of Twitter is no longer public, who's watching over them?
So the SEC helps protect the public when you, the public, invest in companies to make sure that you get full and fair disclosure and that the public is not lied to. Fraud, right? If it's a private company, that's not under the SEC.
When a company is public, and let's say those shareholders who you protect are selling shares to somebody who is buying up shares en masse to potentially become the largest shareholder, similar to what Elon Musk may have done last week and was possibly delayed in disclosing that. Is that a violation? Is there some sort of protection for those shareholders who were selling to a guy who didn't notify the SEC in a timely manner?
Stephanie, you're really good at your job, but hopefully you'll respect.
I'm just trying to understand what the rules are.
I can't comment on any specific matter, but we have a law in the U.S. that's about 50-some years ago that said that there would be disclosures when people go past a certain ownership, 5% of a company. That's something that the SEC oversees, those public disclosures when people buy into companies. And this was really important 50 years ago. It's still important now. It's certainly important as it relates to some rules we're trying to enhance.
Are you looking to change or enhance the rules around moving markets in terms of governing a business in the public square?
I think anybody in a job like the one I'm in should be technology neutral. We're not policy neutral, though. And so regardless of the medium, look, we were founded in the 1930s, and television came along after that, and the internet came along after that. And so there's new forms of communicating with the public through social media and the like, but the time-tested policies are still there that you can't defraud the public, lie to the public. And if you have material information, you can't tell some shareholders and not others.
Do you worry about the road ahead? There's been a lot of financial innovation, whether you're talking SPACs or crypto or meme stocks, a lot of things out there that weren't even here just a few years ago.
You know, Warren Buffett has this famous line. He said years ago in one of his annual reports, when the tide goes out, you see who's been swimming with their trunks off. And so, yes, Stephanie, that we're in a transitional period right now. The war in Ukraine, COVID is still here and changing some of the economics, but we're also in somewhat of a transitioning time where central banks around the globe are transitioning as well. So, but our job at the SEC is to be that cop on the beat, to look out for investors and to ensure that the markets are free of fraud and manipulation.
In theory or metaphorically, when the tide goes out and we can see who's been swimming without their shorts on, how worried are you that, again, we're going to see a whole bunch of individual investors who wanted to get in the game really get screwed here and realize they didn't know what they were getting involved with?
I'm particularly concerned in something called the crypto token. Crypto is $2 trillion crypto asset space.
And a whole lot of people who have gotten mind-blowingly rich.
Well, have they? You know, for a moment. And is it really your listeners, or is it a few people at hedge funds and family offices?
I don't know. Go down to Miami and you're going to see a lot more Lamborghinis driving around today than you did 3 years ago. One word, crypto.
So I do think that the Securities and Exchange Commission is an important agency looking out for regular investors, and they don't all have those Lamborghinis. I think that's why it's so important, the agenda that we have, trying to reform the markets on behalf of the American public.
How complicated is it for you, though, to sort of have this balance between giving the little guy a seat at the table because they want to play ball and also protect them?
You know, when I was little, my dad didn't have much money, but he every once in a while would try to buy a few shares of stock, maybe 50 shares of something.
Things are different now, though.
Things are different now. Things are different now. But I believe individuals can make investment decisions. What's critical, though, is one, that the market, where buyers and sellers meet in these markets, that there's sufficient competition and we protect the markets against manipulation and fraud. And I think our current stock markets, we can enhance them. We can make them better.
Chairperson Gensler, thank you so much for your time.
Thank you, Stephanie.